So hello all, in this video I'm going to explain about the basic accounting terms which we have to know, which everyone has to know before starting the accounting. So today in this video I'm going to explain about the basic accounting terms which are useful. Okay, so let's get started. Voucher. So what is meant by voucher? So voucher means it's a documentary evidence, it's a profit given in which is in support of the transactions made. Suppose if you went to a company and you have did any transactions, mean you have purchased something. So after purchasing goods, the receipt which you are getting, which is called as voucher. You can also say that cash memo. And the similar term related to voucher is invoice. So invoice is nothing but it is also an business document containing details. So in this invoice we will also be containing seller's name and address, buyer's name and address, etc. So what is revenue and capital expenditure? So the revenue expenditure means the benefit of this expenditure we are going to get within a year. Within a year means it does not take more than a year. For example, salaries, cost on equipment, etc., wages. Okay, and what is capital expenditure? So capital expenditure is like the expenditure, the benefit which we are getting after a year. The capital expenditure is that kind of expenditure we will not going to receive it within a year. It takes the minimum time after a year. For example, buildings, furniture and fixtures. Here the point is to be noted is the buildings, furniture and fixtures is also the fixed asset. So fixed asset means nothing but the asset which are going to give long term benefit in the future. For example, your home, and your asset means your car or your vehicle, some vehicle. So these are all fixed assets. So what is revenue from operations? So the operations, the word itself tells that it is the income which is generated from daily core operations. You have kept one company, so you are doing the business of daily you are selling something. By selling something you are receiving some amount which is called income, which is called revenue. So these are the revenue you are getting from selling your doing your daily core business activities in your business. So this is called revenue from operations. And what is sales? Sales are those revenues which we are getting by receiving the sold goods and by providing services to customers. Suppose you have did any transaction, like you have sold any dress to your customer, so by that you are getting some revenue. So these are called sales. These are also called providing services to your customers. And sales are of two types. Sales are classified into two types: cash sales and credit sales. Cash sales are those sales which are entered into only cash book, and the credit sales are those sales which are entered into sales book. And what is owner's fund? So owner's fund, which we also say it as capital, so which is nothing but before starting a company the owner used to invest some money into his business. So these are called capital owner's fund. We can also call in business terms as sole proprietor investment. And accounting is a language of business, and in case of company or cooperative society investment we call it as share capital. So in terms of any company or any cooperative societies, we call this owners fund as share capital. If the business earnings are again reinvested by the owner, means whatever the earnings the business is getting, and those earnings which will be received by the owner, and he is reinvesting those money into the business, then we call it as retained earnings or flowing back of profits or self financing. So that's all about this video. Thank you.